ಆತ್ಮೀಯರೇ ನಮಸ್ತೆ. ನಾನು ಜಯಕುಮಾರ್, ಸರ್ಕಾರಿ ಪದವಿ ಪೂರ್ವ ಕಾಲೇಜು ಶಿಕಾರಿಪುರ, ಇಲ್ಲಿನ ವಾಣಿಜ್ಯ ಶಾಸ್ತ್ರ ಉಪನ್ಯಾಸಕ. 2020 ಮತ್ತು 21ನೇ ಸಾಲಿನ ಪ್ರಥಮ PU ವಾಣಿಜ್ಯ ವಿದ್ಯಾರ್ಥಿಗಳಿಗೋಸ್ಕರ ಆನ್ಲೈನ್ ತರಗತಿಗಳನ್ನು ಜಿಲ್ಲೆಯ ಮಾನ್ಯ ಉಪನಿರ್ದೇಶಕರ ಸೂಚನೆಯ ಮೇರೆಗೆ ನಾವು ಇಂದು ನಡೆಸಿಕೊಡ್ತಾ ಇದ್ದೇವೆ. ಇದರ ಭಾಗವಾಗಿ ಫೈನಾನ್ಷಿಯಲ್ ಅಕೌಂಟಿಂಗ್, ಇಂಟ್ರೊಡಕ್ಷನ್ಸ್ ಟು ಫೈನಾನ್ಷಿಯಲ್ ಅಕೌಂಟಿಂಗ್ ಅನ್ನೋ ಚಾಪ್ಟರನ್ನು ನಾನು ಮೊದಲು ಇವತ್ತು ನಿಮಗೋಸ್ಕರ ಪ್ರೆಸೆಂಟೇಷನ್ ಮಾಡ್ತಾ ಇದ್ದೇನೆ. ಮೊಟ್ಟ ಮೊದಲನೇದಾಗಿ ಸಿಲೆಬಸ್ ಬಗ್ಗೆ ಇಂಟ್ರೊಡಕ್ಷನ್ ಅನ್ನು ಕೊಡ್ತೇನೆ. ಸೊ ಟೋಟಲಿ ದೇರ್ ಆರ್ 11 chapters in this. The first one is Introduction to Accounting, second one is Theory Base of Accounting, third one Recording of Transactions, Bank Reconciliation Statement, Trial Balance and Rectification of Errors, Depreciation, Provisions and Reserves, Bill of Exchange, Financial Statements, Accounts from Incomplete Records, Application of Computers in Accounting and Computerized Accounting. Introductions to Accounting. Accounting is an art of recording, classifying, summarizing, and interpreting the economic events or business transaction. Accounting is treated as the language of a business. How everybody needs the language for effective communication, for transmission of feelings, the transmission of information from one person to another. In the same way, the business also need to communicate between the organization, between the authorities. So for that, the language is essential, and that function will be done by the accounting. What is the relationship between the business and accounting? So business means everybody knows bit about the business. Business means always being busy in buying and selling of goods or services, either to earn the profit or non-profit. But majority of the businesses will do their activities with the intention to earn the profit only. When the business exists, there is a need for recording the transactions or activities which takes place in the form of a financial nature in books of accounts to know the profit or loss by the end of the year. So therefore, the accounting is needed. Once again, the accounting is needed for recording of the economic transactions. Then we shall move on for the economic transactions or economic events. What do you mean by the economic events? The economic events means where the events or transactions takes place with involvement of money or money's worth. Monies or money's worth. So there must be a presence of money or the value of money from one person to another person while exchanging goods or services. Example, sale of mobile phone in electronic shop is an example for economic activity or business transaction in mobile shops. Sale of clothes in a clothes showroom is an example for economic activity. Likewise, the purchase of machinery and expenditure incurred for transporting, installing and keeping ready for manufacturing is also an example for economic event. Sale of food in hotel is an example for economic event. Purchases of materials from suppliers is also an example for economic event. But the human values or any policy matters will not comes under the economic events. So we must understand, and I have already told you that we should record in a books of accounts only the economic events or only the transactions which involves the exchange of value or the exchange of money. Then it is a time to know what do you mean by the accounting. So accounting is an art of recording, classifying, summarizing, interpreting or reporting or communicating. So reporting or communicating is very much essential because the business is run by someone else and it is managed by someone else. So therefore, one who ran or one who found the business, they are in a positions to know the financial position or the result of a business. So therefore, the accounting must do the function of interpreting, reporting or communicating. Now, the process of accounting begins with the identification. Identification of what? Identification of business transactions, whether they are to be recorded in a business or not. Some of the transactions may not be recorded or should not be recorded in the books of accounts because of its nature. Now, so we have to see which are the transactions to be recorded. We have to identify which are the transactions to be recorded and not to be recorded. So which are the transactions to be recorded are the transactions which involves the money or the financial character related to the organizations are to be recorded in a business books of accounts. Next, sale or purchase. The sale or purchase of goods or services. The sale or purchase may be in the form of a cash or in the form of a credit. Usually, every business will do the transactions either in the form of a cash. Cash means immediate exchange of a cash for goods or services on the spot. It is called as a cash transaction. On the other hand, credit transactions. Credit transactions means the goods will be exchanged from seller to buyer, but the money will not be exchanged on that spot, but subsequently the money will be exchanged from buyer to the seller. Such transactions are called as credit transactions. Payment of a salary or rent so is an example for financial transactions, and these find the place in recording of books of accounts. But the transactions which related to the human values, the transactions which related to the change of policies are not to be recorded. Measurement, as we know that very well, since the business will be done for earning the profit and the accounts will be recorded only for money transactions or monetary transactions. So therefore, every transaction should be weighed or every transaction should be measured in terms of money instead of the number of goods or the volume of goods. So therefore, so we have to measure the transactions, how much money is involved. So let me say example 10,000 rupees, 50,000 rupees or 1 lakh rupees, but not 1,000 units or 2,000 units. Next, the money value of goods or services, but not the units or number of goods to be recorded. Recording. After identified and measured the economic events or the transactions which are in economic nature, they should be recorded in the books of accounts. In a books of accounts, in a monetary terms, as I said, only the money value should be recorded in the books of accounts, but not the units or but not the numbers. How to record the transactions? The transactions should be recorded in a chronological order. So chronological order means the transactions should be recorded as it takes place. Let me say in the month of October, on 2nd October, one transaction took place, and on 3rd October, another transaction took place in a particular business, and on 5th October, one more transaction took place in a business. So according to this, that means according to the chronological order, so which transactions we have to record first in the books of accounts is the transactions which took place on the 2nd of October should be recorded first, and on the 3rd of October, which transaction took place, that should be recorded second. And the transactions took place on the 5th of October, that should be recorded in the 3rd place. And the recording of transactions on a date wise is called as chronological order. So therefore, so every business must record the business transactions according to the chronological order. Then how to record? Or where to record? So we have to record as per the established practice, as per the established system. In coming classes, you people will come to know so some of the principles of accounting. The principles of accounting means the principles established as per the concept and as per the conventions. According to that, we will record or we will maintain the system that is called as established practice. Next, the another components of accounting is the communication. So communication means transformation of information from one person to another person. Essentially in a business, the accounting or the accountant must communicate the financial information or the financial performance to its owners. Owners means it may be the founded members or it may be the shareholders and other interested parties. Yes, here we have to communicate the recorded informations or results in a certain form. How to communicate means, so we have to communicate in the form of reports. We are not supposed to communicate as we wish, but we have to communicate in a prescribed form. So that is called as account formats. Management and other internal external users who are interested, the interested parties in this financial results are the management and other internal and external users. And how to give a message to them is regularly through accounts report. Why they use this communication information? They use this communicated information for assessing the financial performance and assessing the financial position of a business. Apart from this, the management may use this information for planning and controlling business activities for a future course of action. This is the importance of communicating the financial results. Who are all the users of accounting information? As I said already, the business will be done by the businessman, but the accounts and other things will be maintained by the accountant. These accountant have to communicate the informations, the recorded informations to the users. The users of accounting may be broadly classified into two. One is the internal users and another one is the external users. Who are the internal users? The internal users means who are involved directly in business. Example, CEO. CEO is nothing but the chief executive officer of the business organization. Next, the financial officers. The financial officers who takes care of the finance in business, they are called as the financial officers. They need the financial information or accounting information. The vice president of a business, obviously they will have a direct interest in business affairs. Therefore, they use this accounting information. The unit managers, maybe the production manager, maybe the sales manager, maybe the HR manager. So these people need accounting information in order to take a decision or in order to convey with other departments. Supervisors, the supervisors of a business organization, they need the information. When it comes to the external users are present and potential investors. Present and potential investors is nothing but who have already invested in the business, either in the form of a share capital or in the form of a debenture or in the form of a loan. They definitely will have an interest in the business activities and the earning of a business. So therefore, they need the financial information. Next, the potential investors. Potential investors means, as we know that very well, the capital is very much essential. Without the capital, one cannot run or one cannot develop the business. Therefore, in order to attract the capital from a new investors, we need to supply the information, accounting information or the financial information even for the potential investors. On the basis of the reports, the investors may decide whether to invest in this business or another business. Therefore, the potential investors also need a accounting information. Then the creditors. Creditors are the person who owes money from the business. That means one who lends some money to the business for the business activity continuation. They are called as a creditors. Then the tax authorities, for the purpose of calculating the tax, how much tax should be paid to the government, they need accounting information. So then regulatory authorities, for the purpose of framing the policies, for the purpose of bringing some new changes to the business rules, the regulatory authorities need accounting information. Disciplines or subdivisions of accounting. As I said already, accounting is mainly concerned with, as I said, so it is an art. Accounting is mainly concerned with recording, classifying, summarizing, and interpretation of business activities. The accounting may be here can be broadly classified into the three categories. One is a financial accounting, the accounting which is related with the finance. Second subdivision is the cost accounting, the accounting which is related to recording the cost of the goods or the cost of the materials, that is called as cost accounting. Then management accounting. The management accounting is another subdivision or a discipline of accounting which provides information to the management for the purpose of taking decisions. It is called as a management accounting. These are all mainly three broad categories or subdivision of accounting. And we have already studied bit a while ago about the accounting. So accounting will provide information to the internal and external users, but now we should know what all the qualities that information should possess. The very first quality of accounting information is reliability. Reliability means dependable. Reliability means so one must trust the informations provided by the accountant in the form of accounting reports. If the informations are dependable, that will be the first good quality of accounting information. The second quality of accounting information is relevance. So relevance means sometimes the business provide informations to either to the internal or external parties, but that information, if it is outdated, so that cannot be used in a certain specific time. So therefore the informations which are given must be timely when and where the information is required. So informations must be available or informations must be provided to such needy people. That is called as a relevance. Next, the third quality is comparability. So comparability means the informations which should be in a standard form and that should be compared with the different two units performance, or that information should be compared for two different times of the same organization. So that is called as a comparability. Then understandability. Understandability means the informations which are provided in the form of accounting reports must be understandable by the user of those information. So as the saying goes, as the very famous saying goes, hang him, don't leave him. So if the receiver do not understands this in the same manner, so that will lead to the disastrous decision, like hang him, don't leave him. The another concept of accounting is objectives of accounting. Nowadays, every one of us do the activities with a specific object. So in order to attain the specific object, we frame all the activities. So what are the main objectives of accounting and why we need accounting? So we need the accounting for the purpose of maintenance of records of business transactions. In order to calculating the profit, in order to assess the financial performance of the business, what we should do is we have to record every day the business transactions. It may be the revenue earning transactions or it may be the expenses transactions that should be recorded. So for the purpose of that, we have to have the accounting, and that is the first aim of accounting. Calculation of a profit and loss. The second objective of a business is to calculations of a profit or loss or profit and loss. So as I said already, business will be done with the intention of earning the profit, and sometimes the business may sustain the loss also. So whatever it may be, but being an accountant and being an accounting, so for a particular period or for a specific period, let me say that for a 12 months period, we must calculate the profit or loss of every business. The third objective of accounting is depiction or ascertainment of a financial position. So depiction in the sense exhibition or calculation of a financial position. How strong the financial position of a business, we must understand. The fourth objective of accounting is providing accounting information to its users. It is another very prime objective of accounting. It should be able to provide information to its users. The accounting process. The accounting process goes like so. First one, economic activities. It begins with the first point, economic activity. Then it processes to the accounting process. The accounting process, as already we have discussed, it consists of identification, recording, classifying, and summarizing. All the things will take place in the process of accounting in a different forms. Let me say that in the form of a journal, in the form of a ledger, and in the form of a financial final accounts. Next, communicating the accounting information. The third process is after preparation of final accounts, after preparations of reports. So we must communicate the prepared reports to the needy. That means for the users, that is the internal and external users. So after getting those informations, what the management will do is they will take a decision. Decision in the sense how much to produce, how to invest in the fixed assets, how to make a salary. So all the things will be taken. This is accounting process. Next, the basic terms in accounting.